All right, so in this video, we're going to be going over what price action is. Essentially, what price action is how the market is moving. We have three different types of price action. We have bullish. Oh, well, we have bullish price action. We have consolidating price action, and then we have bearish price action, right? So let's see how we can notice these in the market and mark these out. So right here, we see this downward movement. That's going to be our bearish price action, right? And then what do we see after that? We see a break of structure right here. Once we see this close above this recent high, and then we see what does price do? Becomes bullish price action, right? And then what happens? We see another break of structure right here at this recent low. And what happens to that? Price then becomes bearish price action, right? And then what do we have here? We have consolidating price action because it's moving sideways. That's all price action is. It's just how the market is moving and what direction the candles are going. If it's going down, that's simple bearish price action. If it's going up, that means we have bullish price action. If it's moving sideways, that means we have a consolidating price action. Um, Normally during New York session, we either have bearish or bullish price action. We don't normally ever have consolidating price action. Um, During these London nascent sessions, that's when you see most sideways movement because there's not a lot of volume going into the market at those times. So as you can see down here, we have such little volume. That's why we're moving sideways. But then you come over here and we see New York session, where us big dogs trade, and look at all that volume. That's why we have this bearish, bullish, back to bearish, bullish, bearish price action. It's another easy confluence. I wouldn't really consider it a confluence. This is more like just understanding. Well, yeah, it is a confluence. It's just understanding why price is moving the way it's moving. Um, when we have bearish price action, that means the price is respecting our bearish confluences, like a bearish order block or a bearish fair value gap or a bearish inverse fair value gap, or a bearish HTF zone. Like right here, what can we see? We have relative equal highs right here, right? We see price closes here. This keep this color coordinated so it doesn't confuse you. Purple are equal highs, and then what do we see? We see this breakage structure right here at this low, right? And that's why we can see price then does what? It respects these bearish confluences because we have what? A bearish order block right here. What else do we see? We see a bearish fair value gap right here, right? That's all price action is. It's just understanding why the market is moving down or why the market is moving up. Like we see this bearish price action, and then what happens after we make these lower lows and lower highs? We have now a higher high and a higher low. Why? Because it broke structure right here, right? And that's why it's now becoming going from bearish price action to now going to bullish price action. Going down, bearish, whoop, now we're going up, bullish. That's all price action is. It's just how the market is moving. So don't overcomplicate what price action is. All it is just how the market is moving. As simple as that. Another short video because we're coming to the end of our learning phase for you guys. We see this movement down, bearish price action, bullish price action, consolidating price action because we're moving sideways right now between these two ranges, this high and this low. We're moving sideways. And then what happens? Bearish price action, bullish price action, back to bearish. Now we're going sideways. And then we have bearish and bullish, and then bearish and bullish and bearish and bullish. That's all price action is. It's just how the market is moving. Like we have this bullish price action, and then what happens right here at this recent low? structure is broken because we saw this close below it, right? Now that's what makes this bullish price action become bearish price action, because we just broke structure. That's all it is. It's just how the market is moving, understanding why it's moving that way, the way it is. So that's going to be it for the video on price action. Once again, you learn what price action is. It's less of a confluence and more of an understanding. Like right here, we have equal lows. Bang. Right? That's all it is. And what happens right here when price retests these equal lows? It shoots back up. Why? Because equal lows hold strong significance. Equal highs, equal lows, they act as support and resistance, and they hold strong significance. Even though it's on the 1 minute time frame, it still holds significance. All right. That's gonna be it for price action, guys. So once again, go on your charts, mark out all the confluences I taught you, mark out your fair value gaps, your order blocks, your inverse fair value gaps, your breaker structures, your levels of liquidity, and really understand why price goes back to those levels and understand why it happens. All right. Hope you enjoyed it. We're getting pretty close to the end of the combine, so hope you guys have enjoyed this learning series and know a lot more than what you did when you first started it. Catch you guys in the next video.